you're saying, look, yeah, Asia was lagging behind the U.S. in terms of regulation, but it's not just caught up. Now it's actually in the lead, correct?
Yeah, I mean, it depends which way you look at it. In terms of ESG rules and regulations, we've seen a proliferation of them in the last 5 years. They've actually doubled. If you are an investor across Asia Pacific markets, you've got a good chance of getting better disclosure now than you do if you buy a US company from an ESG perspective. We think we're entering a new era of ESG regulation in the region. We see taxonomies springing up across the region. We see carbon reporting and carbon markets springing up, and we think that this is a pivotal moment for ESG regulations. We put out a report last week that takes a deep dive into some of the themes that we think offer investors a lot of opportunity. The one that I think is the biggest is really the taxonomies.
So talk to us a little bit more about that. Taxonomies, you're talking about literally classification or labeling, correct?
That's right. It's all about labeling and credentializing what it means to be a green investment or green revenue. There's a distinct opportunity for investors to be ahead of the curve here as these taxonomies spring up across the region. We've seen China introduce a bond catalog, a green bond catalog. Singapore also has a taxonomy. Japan has a transition taxonomy, and South Korea is considering one as well. And what we think is that all these taxonomies are going to find their roots and basis in the EU taxonomy, which is significantly ahead. And it's a useful compass at this stage for investors to get ahead of these regulations coming in. And so what we're doing while we wait for these regulations to be implemented in Asia is we're using an EU taxonomy screening tool to identify companies whose revenues are aligned under the EU taxonomy, i.e. their business contributes towards climate transition or mitigation, and the revenues are highly aligned. And so if you look at that group of companies, as you mentioned at the beginning, we're seeing a green premium for those companies, a sort of 55% PE premium, 65% on EV to EBITDA. And if we really want to get ahead of the curve, we're asking investors to look at under-owned companies in ESG funds that are highly aligned under the EU taxonomy.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.